Guys, there are some incredible opportunities in the market right now. And I'm using options versus just buying the stock outright. Why am I doing that? Because options allow you to use leverage. And with leverage, you can use a little amount of money in order to make a lot of money. All right, I know what you're probably saying. Darren, options are risky. You're going to lose your shirt. Well, let me tell you, options aren't risky. If you do them correctly, options actually lower your risk. And the three trades that I'm going to show you today are defined risk, so you can't lose a lot of money. In this video, I'm going to show you my top three option trades that I am going to have on this week, and I'm going to show you exactly how to place those trades on the option trading platform so that you can profit too. Before we get started, if you appreciate the time and effort that goes into making these videos, be sure and hit the like and subscribe button down below. It really helps out the channel and I appreciate it, so thank you very much. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. There's also a paid course if you want to dig into the options a little deeper and get the most bang for your buck. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and 15 free stocks. You also get the free charting software that's great, and I use it every day. It's a zero commission online trading brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, the first trade that I am going to jump into is Micron Technologies, ticker symbol MU. And you can see right here on Yahoo Finance, you punch in MU, stock is trading at $91. The 52-week range is 63 to 157. So you can see right here on the 1 year, it is way down from where it was. And look at the 1 year estimated target, 167. So it's expected to move up further. So I love Micron. If you look at this article, there's many articles that you can take a look at, but you can see this one by Fatima Farouk from the Motley Fool or Insider Monkey. And he says among the worst performing AI stocks last week. So to me, AI is not going away, and that makes it a buy. The first week of September was actually the worst week for chip stocks. And again, last week we had they all moved back up. So I see with interest rate cuts coming, them continuing to go up. Many investors are now beginning to wonder whether AI is worth the amount of money being poured into it, resulting in corporate spending on AI coming under greater scrutiny. So they talk about the stock has been disappointing investors for the past 3 months, and the financials show that it's actually been doing really well. In the third quarter, the company generated $6.8 billion versus $3.7 billion from the same period a year ago. That's huge. That's almost double. So they're doing really well. The CEO has noted that they're seeing a robust AI demand, which is the factor for 17% sequential revenue growth. They're gaining market share in their high bandwidth memory. So there's definitely going to be a need with AI and the infrastructure that's being built. It's investing heavily right now in spending a lot on CapEx to expand its manufacturing capacity. It invested in the third quarter alone $2.06 billion. And it's an opportune time because the U.S. government is putting different programs in place to support expanding manufacturing in the US as well. So I love Micron for that reason. Let's jump to the Tastytrade platform. I put a link down below if you want to check out Tastytrade. I use Tastytrade and Moomoo. They're both great. We will go to, so if you go on the trade page right here, you click here, you punch in MU right here, then you click on the trade page, and then we've got the regular options. So you can click here, you can have all expirations, and this includes the weeklies, but there's more volume actually in the regular, so I'm going to stick with the regular. Only 5 days in September left, so I want to collect more premium than that. I usually go 30 to 45 days out, closest to 45 days, so I'm going to go 33 days out. October 18th. And I am long. I think Micron with that down move, I think it's going to move up. So I am going to put a put credit spread. I'm going to sell a put credit spread. We've got 75 IVR. That's extremely high. So we can collect good premium. If we click on this 85 um, strike puts are on the right, calls are on the left. We're going to sell. We're going to click on the bid to sell the 85, and we're going to collect $3.75. There's 100 shares per option contract, so that's really $375. So with this, we're going to sell the 85, and then I am going to buy as protection the 80. So this is $5 wide, and we collect $1.52. Although, you know what? I'm not going to go $5 wide. I'm going to go $10 wide. I'm going to collect $2.51. So that's $251. And look at this, 32 delta. So what that tells us, because we're below the actual price right now, we've got a better than 50% chance that we're going to profit on this trade. If you look right here, probability of profit is 67%. So that's pretty good. 2/3 of the time, we're going to make money on this trade. So you can see this green area right here, that's our profit zone. So we can click review and send and place this trade. Our max loss is the width of the spread, which is $10 minus the 251. So you can see max loss, $749. So if for some reason it does move down below this 75, although it's already way down, as you can see, then we can lose money. If we go to the curve mode right here and analysis, you can see here's where the stock is right now, 91. We're profitable. Our break even is like down here, 82. It's that $10. It's the 90. It's the 85 minus 10 plus 251. So I stand to make 251 bucks. I plan on doing that in the next 33 days, right here, 33 days until expiration. If for some reason it did move down, then you know what I would do? I would roll out to the next month, roll from October to November and collect more premium and still stay long. Just close this one, put on another put credit spread. So this is my number one trade, or one of them. I've got 3 top trades right now. So be sure and watch to the end. I've got 2 more doozies coming. If we look at the financials, super strong financials. Here's the revenue and income, and then the balance sheet with the assets and liabilities. And then if you look at the forecast, everybody has it a buy and a strong buy. And again, the target price is like 160. So I love Micron going forward, and that's the trade we're putting on there. So now let's do the next one. And this one is coin. I know all you crypto lovers out there. Actually, let me know if you're trading crypto. I have some Bitcoin as well. But coin is a great stock. Love the CEO, and look where it is. It's kind of a flag pattern, but it started to move up. There was a big hit in crypto. Coin is the biggest exchange out there for crypto, and it's way down. It's the bottom of the Bollinger Bands. The white is the Bollinger Bands. The green is the 13-day, and then the 50-day moving average is the red. And I expect it to move up. And the financials, again, everybody's got it as a buy. A lot of people, there's a couple sells here, but mostly buy. Target price is much higher than where it is now. Financials are strong. And if we go to the trade page, let's do the same thing. We'll go to the table mode, trade page. I'm going to pull up to October. And let's go, again, I like to go about that 30 delta. So I've got a 70% chance. So I'm going to go 150, 140, and I'm going to collect $3.05. So that's $305 that we're going to collect on this put credit spread. As long as it stays up above that 150, we collect the 305. Our max loss is the $10 width. So this is defined risk. We're clicking on the bid to sell the 150 and then the buy to buy the 140. So this cuts off our loss. And our max loss is $695, but you know, as long as we stay above this 150, we make $305. So we go to the curve mode again, and because we collected that 305, our break even is actually down here at 147. So it's basically that the 150 short strike minus the $3. So it's not 147, it's 146.95 actually because of this. but 695 max loss. We've got a 67% probability of profit. So, our odds are better than 50-50. They're 67%. So 2/3 of the time we're going to make money on this trade. And again, if for some reason it did move down, even though it's already been down and there's quite a bit of support at this 150 level, I expect it to stay above in the next 30 days and keep my $305. So let me know what you think of coin. Let's jump in. I've actually got an article. Well, here you can see, here's the 5-year chart. You can see it's down right now, 1 year down. Target price 259. It's at 163. That's way up. The PE 28. That's low for Coinbase. 52-week range. It was up over two. It was up to 283. So 163 now. It's a screaming buy to me. This article is Coinbase the best Bitcoin stock to buy according to the hedge funds. So Zara Hamid wrote this article, and Skyridge's CEO Anthony Scaramucci expects Bitcoin to reach 100,000 by the end of 2024, and so that's almost double from where it is today. They shortlisted the top 7 stocks from their list, which is held by the hedge fund managers. The most popular stocks hold for crypto held by the hedge fund managers. And the reason that they do this, their research has shown that they can outperform the market by imitating the top picks of the best hedge funds. So kind of makes sense, I guess. But I want to do my homework. And again, guys, when I'm doing these trades, this is what I'm doing. So you got to do your own homework, figure out if these are right for you. But again, let me know in the comments down below. And if you have a great stock, a great trade, let me know as well. And because I want to make money too, just like everybody else out there. We can help each other. But Coinbase, ticker symbol coin, offers an online platform for buying, selling, saving, earning, transferring crypto. So they're the biggest one out there for both individual investors and institutions. They've got 245,000 ecosystem partners in 100 countries, or more than 100 countries, and they've got a comprehensive platform for crypto. They've got 5 strengths, which include trust, crypto-first technology, easy-to-use products, and repeatable innovation and significant scale. And they store over $90 billion in assets on the platform. So they're the biggest. They're huge. Customers have not experienced a loss of funds as a result of a security breach. That's huge, especially with everybody concerned about security breaches with crypto right now. Okay, guys, and the last one that we are going to talk about is ExxonMobil. And if you look here, punch in XOM, ticker XOM in Yahoo Finance, and you can see the current price, 111. Look at we've had a little bit of a dip, so that's why I like to go long, or actually, yeah, in this one, I'm going to be neutral because it is trading within a range, you'll see here. But right now, the PE ratio is 13, so very low, good PE ratio. They've got a dividend at 3.42%, so good dividend. Target price is 132, so it's expected to move up a little, which is, great for either going long or an iron condor, as long as it's not going to move up too much, which I don't think it will. 52-week range, 95 to 123. So it's been trading between that, 100, 120 range pretty consistently. Why ExxonMobil is slipping today, and this was just a few days ago. It was Tuesday of last week. And oil was down, and oil was down all last week. It was pretty much the only sector. But the reason is OPEC cut its global oil demand forecast for 2024 to about 2 million barrels per day. So it cut its forecast, and oil slumped. Crude oil slumped to below the $70 mark. Right now, crude oil futures are at like $68 per barrel. So the last thing you should know is, actually what it says is, however, the last thing you should do now is panic sell ExxonMobil stock. Yeah, I mean, it's a solid stock. I love trading this stock. ExxonMobil has navigated some of the worst oil storms in the last 135, 135 years or so, and it's got a strong balance sheet. It's a oil giant. It's got a dividend. It's got 41 consecutive years of a bigger dividend and paying a dividend. So it's a rock solid stock. So let's look at, we'll punch in XOM here on the Tastyworks Trade platform. Let's look again 33 days out at October. Pull that up. Actually, you know what? Let's look real quick at the chart. So here's what I'm gonna look to stay above the 107 and below the 117. And here's where we're at right now. We are at 111 and 111. 38 IVR, so right in the middle there. And look at all this time we've spent in that range over the last, since March. And that's the last 6 months. We broke out a little bit above here, but I don't think we're going to do that now due to what we just read about in that article. So I don't expect us to move too much lower, especially with the election coming and either oil drilling being on the table or continuing to buy from other countries, which is not smart in my opinion. But anyway, here we go. Let's look at the no financials available right now on this, but we're going to go to the trade page, October, open it up. Let's punch in we're going to click on the bid to sell the 110 put. So we're going to do a put credit spread, and then we're only going to go $5 wide on each side, and I'll show you why. And then we're going to click on the buy or the ask to buy the 105. So we collect 136, which is $136. It's $5 wide, so our max loss is the 500 minus the 136, or 364 right here. And you can see 42%, so yeah, 81% probability of profit. Well, but I'm going to sell at the same time the 150, 120. Click on the sell or the bid on the call side, and then buy the 120. So now we're collecting 244, and our max loss is 256. So it's $5 wide. We can only lose on one side, right, guys? We can't lose on both sides. It's either going to be above or below. We could win on both sides, though, if it's between the 110 and the 115. And then we keep this entire $244. So it's almost a 50-50 shot as long as it stays between this area. So let's look at the curve mode, and you can see because we are collecting 244, we have an extended break-even point all the way down to 107 and up to 117. And if you look here, 107, 117. So this is all our profit range, and that's what I'm looking for right here. I already have some ExxonMobil on, but I thought I would share this one. And the reason that I'm going $5 wide is because we can collect almost half, 244, and still get this wide. But let's look. If we go out to the $10 wide, I'm only collecting $3.32 versus 244. And look at my max loss is 668, and I'm only collecting 332. So I mean, it's still good, but I would prefer the $5 wide at this point. And then if it moves in one direction, if it moves down, I may throw on just the put side, a put credit spread going forward. So that's kind of how it works. There's the curve mode. Hit review and send, and place your trade. All right, guys, I put a link down below for the free options workshop. Remember to grab that. Join Moo. Get your 15 free stocks. Remember to hit like and subscribe. Let's get this video out to as many people as possible. Leave a comment, ask a question. Let me know what you're trading. I answer every question. Thanks for watching. I'll see you in the next video.